Hi, everybody. Dale Pinkert here at TradeGATEHub.com, powered by TradeView Markets. Hope everyone has survived the Consumer Pain Index, renamed from price to pain, and the number came in hot, and you could tell the S&Ps are under pressure. I don't think we're going to hold the 61.8 level, and now that I look at it, I think we're set up for one more low in the markets. And unless we get a real big reversal, it's been down here knocking at the door too many times. So you just take, these recent lows, call it 37.50 and call it 39. That's going to take you back down towards these lows to try the lows, possibly take them out. We'll see if we have daily divergence, but that's the way it looks to me. I thought we were going to have an everything market. Now, it's very interesting. When I left you on Monday, during Monday's video, I talked about a short at 37.60 in the end, which was right here during the broadcast, these two candles. Told you that I'd be booking it, getting out ahead of the number, looking to recommit. And the reason I'm looking to recommit is we'll have another non-confirmation at a new high. I think 138 is doable. We'll see. And if the RSI on multiple time frames stays under 70, I'm going to go with it. Also, when you think about the yen making new highs and a hot number, let's take a look at yields. The 10-year, they're higher, but I'm still going with my theory that it's possible that we just get back to this 320 level, okay? And that's still 18 bips from here. And that would have real good symmetry with this left shoulder, okay? Or it could be a descending triangle and eventually take out this low at 272, 274 and head down towards 220, maybe 2%. So I'm more in the camp, especially after a hot number like this, that, we should have been doing better, at least taking out the high from a few days ago on what was worse than expected inflation news. And I just want to go back and just run through the currencies again. So we're getting new lows in euro, okay? We're getting this new low in euro, and really for the first time starting to get some divergence on the 4-hour time frame. Perhaps we have to have a print under parity, so there's a party and people pop their champagne corks for a low, because I do believe the yen has weaker structure, RSI structure, than the dollar, but the dollar did make marginal new highs. And check this out, okay? We are not confirming on the 4. There's still a little divergence, but not ideal over 80. And you could tell that the, look at the RSI structure for the yen compared to the RSI structure for the dollar. Therefore, if I want to be short, I want to be short the weaker structure. So US dollar yen, the preferred short, but I'm not saying that we're not getting closer and closer to a bottom. I know someone had about 108.60 for a target. It's still nothing wrong. Dollar's still doing nothing wrong, but the yen is starting to lose momentum. As we move to cable, I've been talking about 3 drive, and yesterday it tried to reverse, close enough for government work, but this wedge line is going to come in 100 lower, around 1730. So this will be a classic 3 drive formation in the cable. But something else I talked about on Monday, after euro pound was just holding this ledge here, I said I want to be a buyer at the 84 level. I'm long. Put out the call today. Stops under 83.80, give it a little tolerance, but this could be a nice pullback to buy. If we don't hold this level, we're going to 83. I'm not going to stick around for that. So possible nice correction to buy in EG. Do think that this is the beginning of a new trend, not just a little bear market rally. And I think that we could have something like this from here. So if we went from 82 to 87, that's 5. You just have equality. It'll take you up towards this 89 level. And this has been working for weeks. okay, and months. And I view this as a pullback opportunity. We'll see if it is, or we're going to try the next fib level. Aussie, you need to pay attention to, because I was talking about this Aussie earlier, and we have this wedge line that we closed underneath it and then got above it, and we're sitting right at it. Again, this has the best RSI structure. It's going to be my preferred long. I'll just do it again. Look at the weekly. Okay, let's go even longer term. Here's the monthly on Aussie compared, and this was a COVID low, right? And look at that, it looks corrective, right? And then you look at the euro, which is taken out the COVID low. You look at cable, it hasn't quite taken out the COVID low. I don't think it will. So many things have retraced. A lot of different stock averages have also retraced to their prior COVID highs, or even underneath it. I believe the index is the value line has already done that. So looking at USD CAD, I wish they would get this stop hunt out of the way here. I know there are a lot of stops above this 131 level. So, we'll see. I think this is a final thrust up in Canada between 131 and 133 for shorts. And that I also am looking to accumulate the Aussie dollar. If you use reduced leverage, there's nothing wrong with owning it right here, even if it went 100 pips lower. Looking at gold, it's fighting its way back due for at least a bounce. And similar situation in the silver. Copper, for the first time, that last big bounce of a 3% bounce here is, look at my theory, okay? So been watching me for a while, I believe that when momentum confirms price, you could get rallies and bounces, but the probability of it being an important low is not real high, because momentum confirmed price. And this time down at new lows, that's not happening. The oil's knocking at the door of a major breakdown that I've been talking about for quite some time, especially since this failing rally, and all the failing rallies. We're sitting right on the precipice here at 94 as Biden makes his way to Saudi Arabia. A story that might happen in Saudi Arabia, and whether or not he gets them to produce more oil, I wouldn't be surprised if the Chinese are talking into the Saudis' ears and might be pushing for Saudis to price their oil not just in dollars. And that would be seen as a very big symbolic, potentially end to the petrodollar. So we'll see what happens on this trip. It's high stakes, and to get more oil out on the market, perhaps we're going to concede, although we don't even have to, some dollar hegemony. So that's the CPI. Ideas ahead. I'll be with Adam tomorrow, but I want to see what happens here in the next couple of days with the yen. I still think that we're setting up for a correction. And then if we take out this little support line here, which is now coming in around 35.40, 35 and a half, you're going to get a breakdown to 32. And, you look at the yen, it's been very powerful. But look at the dailies at new highs, have not been confirming for a while, still aren't, compared to the dollar. So when you have the dollar confirming or way above 70, so this is my big theme today, is for you to recognize the relative strength and the relative weakness, and short the relative weakness on strength and buy the relative strength on weakness. This Dale Pinkert signing off, silver starting to get a pop, and gold reversing. Still married to my silver miners. And I'll see everyone tomorrow with Adam Button from Forex Live. And I know it's the middle of the month, but he's one of the best news traders out there. Be great to catch up with Adam at Forex Live at FX Button tomorrow. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. Thanks for your attention. Join us in the main room at TradeGATEHub. Open up a demo with Trade